Generally speaking, they're short. You get furloughed employees get their payback. That's why they've had minimal impact on the economy. Now, that being said, I don't want to say shutdowns have zero impact, because they do. There's something we're watching. We're not making any changes right now, but as they drag on longer, that certainly could impact how we're looking at the stock market and kind of the bond market as well, and potential moves that we want to make and communicate to you and your clients as well. I don't think we're there yet, but the longer it drags on, that's a possibility that we need to modify something. But again, I think it's all said and done. Trumps generally are the deal. Both sides will come together. They'll either kick. What historically happens with politics, they kick the can down the road, right? So it's like, okay, they'll pass this. We'll go into another couple more months, and then we'll have to redo this whole thing all over again. But that being said, there's nothing to change yet. The thing that that's probably have a little bit of concern for me is that when the government shut down, we're not getting government data. And so that's, the Fed policy. So the Fed, is data dependent. So that's one thing, drives investors' expectations. Investors, myself included, generally like to speak, like when the Federal Reserve's cutting interest rates, that puts a tailwind on the overall economy, which puts a tailwind on the stock markets. And if you remember back in September, the Fed, resumed their cutting. They cut 25 basis forward, and how they're data dependent, which means they look at government data. And since now that, the government shut down, there is no government data to look at.